Investing in cryptocurrency can be a great way to grow your wealth, but it's important to remember that the crypto market is highly volatile and the value of individual coins can change rapidly. One way to mitigate this risk is by building a diversified cryptocurrency portfolio. In this video, we'll go over the basics of portfolio diversification and how to build a portfolio that's right for you. First, let's talk about what portfolio diversification is. In traditional finance, diversification is the practice of spreading your investments across different assets to reduce risk. The same principle applies to cryptocurrency investing. By spreading your investments across different coins and projects, you can reduce the risk of losing all of your money if one coin or project underperforms. There are a few different ways to diversify your portfolio. One way is to invest in different types of coins. For example, you could invest in a mix of Bitcoin, Ethereum, and Litecoin, which are all different types of coins. Another way to diversify is to invest in coins with different use cases. For example, you could invest in a mix of coins that are focused on smart contracts, decentralized finance, and privacy. Another way to diversify your portfolio is to invest in different stages of projects. Some projects are in the development stage, while others are already up and running. Investing in a mix of projects at different stages can help mitigate risk because the value of coins in the development stage is more uncertain than the value of coins that are already up and running. When building your portfolio, it's also important to consider your risk tolerance. If you're comfortable taking on more risk, you may want to allocate a larger portion of your portfolio to high-risk, high-reward projects. If you're more risk-averse, you may want to allocate a larger portion of your portfolio to more established coins and projects. Now, let's talk about how to actually build your portfolio. One way to start is by allocating a certain percentage of your investment to each coin or project. For example, you could allocate 30% of your investment to Bitcoin, 20% to Ethereum, and 10% to Litecoin. Or you could allocate 30% to smart contract projects, 20% to decentralized finance projects, and 10% to privacy projects. Another way to build your portfolio is to invest a set dollar amount in each coin or project. For example, you could invest $1,000 in Bitcoin, $500 in Ethereum, and $250 in Litecoin. Or you could invest $1,000 in smart contract projects, $500 in decentralized finance projects, and $250 in privacy projects. It's important to remember that your portfolio should be regularly reviewed and rebalanced to ensure that it aligns with your investment goals and risk tolerance. As the value of your portfolio changes, you may need to adjust the allocation of your investments to maintain the desired level of diversification. It's also important to conduct thorough research and due diligence on the coins and projects you're considering investing in. This includes reading the white paper, checking the team behind the project and their track record, and looking at the coins or project's adoption and usage. Finally, it's important to keep in mind that cryptocurrency investing is a long-term game. Don't get caught up in the short-term fluctuations of the market and make sure to have a clear investment strategy and goals. Diversifying your portfolio is one way to reduce risk, but it's not a guarantee of profit. Always remember to do your own research and consult with a financial advisor before making any investment decisions. In conclusion, building a diversified cryptocurrency portfolio is an essential step in reducing risk and maximizing potential profits. By investing in different types of coins, different stages of projects, and different use cases, you can create a portfolio that aligns with your investment goals and risk tolerance. Remember to conduct thorough research, due diligence, and regularly review your portfolio to ensure it aligns with your investment strategy and goals.